And is there anything that can stop the S&P 500's bull run? Hello everyone, Monty here, market analyst at IG with another technical cheat sheet video. Though in this case, it's going to be pretty straightforward in terms of looking at those key technical indicators and formulating the overview. You know it's going to be something bullish with record high after record high. Also going to be pretty straightforward when it comes to both conformist and contrarian strategies. It doesn't hurt to take a look at whether or not it might be a different overview and what strategies we might deploy then. There's also a matter of levels, which haven't changed much. Spoiler alert, for both weekly and daily levels, given the fact that it's been relatively controlled moves higher. And when it comes to where traders stand, clients on our end are very cautious shorting into price gains, but still very much heavy to the sell side. They aren't shorting like they were before, but they are still majority short. When it comes to COT speculators, we did have a shift to majority buy, but they've shifted back towards slight sell territory. We will get into that later, as well as fundamental considerations. Given it's a week where you got central bank members speaking, including Fed Chair Powell's testimony. And yes, when it comes to economic data, the biggest and baddest of them all, US CPI. So let's go and get started. It's going to be pretty straightforward when it comes to key technical indicators. You take a look at the chart, you take a look at the record high after record high price above all its main moving averages. Charts, by the way, courtesy of IG's trading platform with key technical indicators plotted on them. But you can see positive DMI, ADX well in trending territory, RSI in overbought territory, and price walking the upper end of the band. That's when it comes to the weekly time frame. The daily, there have been some choppier times before because it's very, very easy to shift technical indicators on the daily time frame compared to the weekly. But in this case, they're all flashing green, just like its weekly cousin. Price above all its main moving averages. Similar story. ADX well in trending territory. RSI overbought. And look at that. It is walking the upper end of the band, at least as of doing this video. So when it comes to the technical overview, it's a pretty straightforward one. Like this isn't like we did when we did USD JPY for the second time. The overview was still volatile over there. In this case, you're looking at bull average. Depending on, usually you look at a channel, you might say, okay, fine, maybe it's something more of a stalling bull. In the sense, not in the sense that it can't offer a record high after record high. It certainly has done that, but in the sense of failing to offer much upside follow through intraday and intraweek for conformist buy breakout strategies. Now that doesn't mean that they haven't won out, so to speak. It's just they've had to wait a bit longer for that follow through to come in. And you take a look at strategies in this case for the conformist. By the way, you got buying for support. After a significant reversal. So we're still very, very cautious on dips, and that's really the difference between a bull average versus a stalling bull. But when it comes to first resistance, we're still going for a buy breakout. And when it comes to contrarians, by the way, selling the first resistance, weekly first resistance after a reversal, or only after a reversal, I should say, and selling the first support upon a breakout from above. The thing is, there are those who might be anticipating a hold, and they have had moments of outperformance when there hasn't been consecutive gains, or I should say consecutive follow through 2 weeks in a row. That's kind of been the problem, right? Because if you look at how we're getting up there, if it's happening slowly, slow and steady, there are chances for traders to say, okay, let me try and short off the highs, but you got to be extra cautious. You have to be extra careful, and you have to realize that you could get stopped out quite easily because you could get an additional week or two of follow through. And by the way, it's not just to the upside, it's clear to the upside, but we have had cases as well to the downside where you have a week or two to the downside. And that means that those trying to trade that hold have to be a bit more cautious. And when it comes to levels, by the way, because it's been such slow and steady controlled moves, the distance between the relative starting point and the first level, it was 66, and between the first and the SL, it was 33. Let's take a look at what it is. You don't even need a drum roll for this. Barely changed. 67 from the relative starting point to the first resistance, and that goes to show how controlled it has been. We'll get to the fundamental reasons as to why that might be the case. What about when it comes to the daily time frame? Here's the thing. Whenever we've had pullbacks and things gotten choppier, it's stayed with a bull average overview, primarily because it's been borrowing from its weekly neighbor. There have been cases where, fine, you're within a bull channel, so even if it's a wide enough channel, even if there's a pullback, you still want to hold on to it and you still want to go with the bull average overview. But there are times where that hasn't been the case, and a lot of times you can't really look at the technical boxes. They are flashing green now. You kind of have to look more and more at what's going on when it comes to the weekly overview. That's why you got the weekly market report on Mondays to look at the weekly overview, and then you got the daily Monday through Friday to see what's going on. But similar strategies in terms of for conformists as well as for contrarians. Whenever you get volatile upside movements, it's usually after a volatile downside. I mentioned that before, still is the case right now. And I have to say that when we did get that pullback in the past, it did briefly shift to consolidation in volatile, where breakouts were the conformist strategy. So when it's going down, you're sort of going with it. And then when it was going back up, you're going for buy breakouts as well until it recovers, and then you go back to a bull average. So you're going for breakouts because you're looking at volatile movement when that initial volatile move down occurs. But then once you're back up, you're back to bull average. You're back to generally generally slow and steady gains afterwards. And like before, in terms of those that want to trade a hold in these areas, what you want to do on a daily time frame, because the levels are narrower than the weekly time frame, you want to go for a sell off the first resistance or buy off the first support only after a significant reversal, versus the weekly where you could trade those off of a reversal. You don't need to wait for a very significant reversal, especially if there isn't that much happening that week. When it comes to levels, well, just like the weekly time frame, look at that. Again, hardly a change. It's increased just slightly from 23 to 24 for the daily time frame, and it's held when it comes to the gap between the first and the SL. And as always, stop loss at your discretion. You obviously want to take into account the proper risk reward metrics. So if you at least want to go for 1-to-1, if not 1-to-2, then you take that into account in terms of how much follow through you're taking, or if you're, for example, buying off the first support, how much are you taking it up for, and then afterwards you can calculate the stop loss, or you can adjust and tweak the stop loss accordingly. So pretty straightforward when it comes to the overview, pretty straightforward when it comes to levels. What about when it comes to sentiment? Now, last time we did the technical cheat sheet for the S&P 500, client sentiment wasn't that far off extreme sell territory. Heavy sell, 74%. COT speculators, they weren't just shy of heavy sell territory, by the way, at 64%. What about now? Latest figures, IG client sentiment still in heavy sell territory, but not as close to extreme short. We are going to plot on the chart to tell you what's going on and why that is the case. COT speculators, by the way, not that far off shifting to majority buy. Did have a big increase in long, simultaneous drop in shorts, and that is taking them from slight sell from majority short 55 to just a slight sell 51%. A little push, and they should be in majority buy territory. Now, I've mentioned before that when it comes to COT speculators, 4 key indices, the best correlation is with the Dow. So you want to look at the Dow 30. We do have that on the weekly sentiment report as well as the weekly and daily market reports. You can take a look at that and see what they've done. Just to give you guys a small hint, they did shift briefly to slight sell, but they've gone back to majority buy. Keep in mind, though, that when it comes to the Dow, it hasn't been enjoying record high after record high the way the S&P 500 and NASDAQ have. It's just one of the better ones in terms of looking at what they're doing from a momentum, and because it has such high correlation. But let's go ahead and plot this one onto the chart. Green dotted line for COT speculators, blue dotted line for IG clients, and as percent long, looking at the left axis for percentage long. So this red dotted line, that's the 50-50 line. Whenever they go above the green or blue, which in this case the blue dotted hasn't, but the green dot did go up back in April and then came back down again. Whenever it goes above, it means they're majority buy. Whenever they're below, majority short. Let's go ahead and start with IG clients. Majority short, the blue dotted line, this entire time. And when we had this move higher, they went, they took it into heavy sell territory, weren't too far off extreme sell. Didn't get to extreme sell, by the way, in other indices like the DAX, which we'll cover that in another technical cheat sheet video. But then trying to work their way out of it as they moved higher. The moment you had this pullback, boom, they briefly fell out of heavy sell territory. You did have cases where they tried to go ahead and short into price gains, but I want to say generally much more cautious, with the exception of this move right over here, where you had this pop over here, and then when you got this last move over here, you can see that they've actually pulled back a little bit. So very, very cautious shorting into price gains towards the end. It's only when you get some range-bound movement, that's when you start to see the sentiment shifts quite a bit, because they have a chance to work their way out of it. What about when it comes to COT speculators? Majority short for quite a long time. Keep in mind, it's you don't just have speculators here. You also got the guys who are hedging and stuff. So, and when they hedge, they're going to be to the sell side. Even on our end at IG, you got those that when you're looking at client sentiment, you do have those that are hedging via the S&P 500. It's a far better tool in terms of representation with their portfolio compared to, say, the Dow. And that's why you look at the Dow when it comes to COT speculators, and you want to take this stuff with a grain of salt. But they did go to majority buy. They did afterwards take it back into majority short, and now they've opted to stay quite close to the middle. I'm going to zoom into the daily time frame to show you how close they've been as of late. Whereas, when it comes to clients on our end, you can see right over here what they've been doing in terms of being a lot more cautious shorting into price gains as of late. Last but not least, let's look at fundamental considerations. Look, AI and tech flows, still a significant factor. You look at the weekly fund flows coming out of LSEG, for example, and usually tech as a sector still gets a lot of flows. And that means that there are going to be a lot of sessions where there's a correlation breakdown. Data's not so good. If you get a softer labor report, for example, NFP last Friday, where, headline was better, but digging beneath the surface, looking at the household survey, didn't look too good. Unemployment rate rose to 4.1%, taken from the household survey. Days like that, and you think, okay, if you have bad data, that means that the Fed's not going to be as hawkish, or that means that rate cut likelihoods out of the Fed for September should firm up a bit. And they indeed have. It was about 60-40 we get a rate cut. Now it's around 80-20. So fine, that's fine. But there are sessions where you had stronger data, which should, reducing the likelihood of rate cuts out of the Fed, and still the market would move higher. Why? Because at the end of the day, people are asking, where's NVIDIA? Or I should say, where are the chip makers? Where are they at? It's kind of like, I had a teacher who didn't really care what we were doing, always wanted to know where that one troublemaker student was at. He's like, where's Sam? Where's Sam? Where's Sam? It's like, there's the rest of us, but that's kind of what it's been for the market. It's kind of, where's NVIDIA? Where's NVIDIA right now? What's happening? What's happening to the chip makers? And that's kind of been driving a lot of those moves. Not the healthiest of narratives, especially when at times we've had moments of rotation over the past few weeks, one or two sessions where it looked like rotation and the Dow, outperformed. All of a sudden, we're back to that. Most of the sectors are in the red, but tech's on top. Tech, communication, consumer discretionary, depending on which one of big tech is in it and is doing quite well, they're on top, and that's kind of driving these key indices, the larger indices, S&P 500, NASDAQ 100, that have a heavier tech weighting to further gains. Again, not the best narrative you want to have, because that means we're really relying on this, but that's essentially been the story. So what have we got next to look forward to? Earnings, the financial heavyweights are going to be on Friday, though. Shouldn't expect too much of a surprise because they've already done a lot of their announcements when it comes to share buybacks and dividends following the Fed's annual stress test. So not really much room in terms of surprise, but hey, might look at what they're expecting and what their outlooks are going to be for the U.S. economy. So that's obviously going to be important. And when it comes to data, like the bigger one, that's going to be U.S. CPI on Thursday. And then you got producer prices on Friday, as well as UFM's preliminary figures, which includes consumer inflation expectations. We did get the figures out of the New York Fed. Was it the 1 and the 5 year? Both of them dropping, but rising for the 3 years. So a bit of a mixed report. And then, of course, you got the Treasury auctions, the 3, the 10, and the 30 year. And yes, Fed Chairman Powell testifying. It's usually day one, which is going to be on Tuesday. If you're watching this, this is being created on Tuesday, but Tuesdays, that's usually going to be more moves because that's when that's the initial one. And then if it's on Wednesday, if it's just sort of a repeat, you might not get as much movement thereafter. So that's about it from our end. Hope you enjoyed this video. Good luck out there.